Welcome to our next video, General Journals and General Ledgers. So last video we looked at our debit and credit rules. We know our 5 accounts: assets, liabilities, owner's equity, revenue and expenses. And we learnt that we increase some with debits and we increase others with credits. And we now know that if we get it in the right order, our top and our bottom are asset and expenses. We increase with debits. Everything in between is a credit. We also looked at the 4 questions. When we're looking at a transaction, we're going to ask ourselves, what accounts am I affecting? What type of accounts are these? Am I increasing or decreasing them? And therefore, knowing my accounting rules, is it a debit or a credit? So now that we've got that theory covered in our head, locked away, how do we now record this actually into our accounting system? Well, we do this via general journals and general ledgers. So let's have a quick look at both of them. General journals are a summary of the transaction. We're going to summarize the actual transaction itself, like we're doing with those 4 questions. In fact, that's where we get our information from. It shows the account and the debits and the credits as well as the amounts. So let's have a look. Last video we did an example where we wanted to buy a forklift, and we worked out that we wanted to debit the forklift and credit our cash. So a general journal would look like this. You can see there we've got our date, we've got our debits and credits. We can see what's going to go in as a debit and what's going to go in as a credit. So let's have a good look at it. So our debits are always listed first. Now in some journals there's going to be multiple debits. We list all those debits before we list our credits. When we list the credits, we indent them, just so it's a bit of an easier reading when it comes to, especially when it comes to seniors supervising and signing off journals. Just makes it easier for them to read. We put a summary under each journal called a narration. In the big wide world, it's where we're allowed to put extra information like an invoice number. It also means that when an auditor's looking at our journals, it gives them a bit of an idea of what's going on. Hopefully it means that any questions they have are answered straight away with that narration. It also means you can put in, if you're going to be filing information away, a journal reference or a journal number, so you can then dig up more information on it. I ask my students also to put a debit and the credit at the front. It just means that in the real world, not so necessary, but in our academic world, when you're a little bit pushed for time in an exam and whatnot, if you've got the debit and credit there, you can't accidentally muck it up. It just makes, again, you're going to guarantee that what you want to come across is coming across 100%. So I ask all my students to put their debits and credits in the front. And of course, we have our debit and our credit column. Now, in an exam, it's probably going to be ruled up for you. In a workbook, same thing. But if you're just working through an exercise, you're doing it in your own exercise book, it's probably not going to be ruled up. But what it does mean is you've got to make sure it's got a clear debit and credit as you're writing through. Now that we've done the general journal, which is the summary of the transaction, let's have a look at the general ledger and its differences. So the general ledger, more commonly referred to as the GL, is a summary of all the accounts. So remember, the general journal was a summary of the transaction, whereas our general ledger is going to be a summary of all our accounts. So all our bank transactions are going to be lumped together, and all our sales transactions are going to be lumped together. So general journal is for a transaction. Our general ledger is a summary of all the like transactions. Let's have a look. So 2 types of GL, a T account and a column account. T accounts that were around when I was your age doing university. Much more common in this day and age is our column accounts. So let's have a look at that one. You can see here up the top we have our title showing us which account it is and their account number. Obviously This is more related to computerized accounting than a manual accounting system, but that's where we're all headed, so we need to know where it goes. We then have our titles for each of our different columns. Date, fairly self-explanatory. Our details or our explanation column is actually a cross-reference from the other account, and we'll have a look at that when we do a practical example in a sec. There's our debit and credit columns where we put in our debit and credit, and the one big advantage that the column account has over the T account is we have a running balance. So we don't need to total all our accounts up at balance day. We can tell just by glancing at the last line on our general ledger, and we know exactly what the balance is. So let's kind of wrap this up together and look at our example before where we were debiting the forklift and crediting the bank. So there's our general journal, and here's our general ledger, our two, bank and forklift. Now I want to put a debit into the forklift account for $80,000. So I come down to the forklift account and I'm going to put $80,000 in the debit column. I'm going to update my balance. In this case, not very hard, just $80,000 debit. And then I'm going to go back and I'm going to fill in my date and my details. Now the reason I encourage students to do it this way is I find that a lot of the time they go to the forklift account, they put in details bank, they then look up at the journal, I want to put a credit in the bank, so they put in a credit. Yes, bank is a credit, but you're actually in the forklift account. You've just put that in as a cross-reference. So to get around that, I always say put in your debit and your balance first, and then the date and the details second. We'll do the same with the bank account. I want to put in a credit into my bank account for $80,000. I'll go into my credit column. I'll put in my $80,000. Now I need to update my balance. Now you can see here we already have a balance, so we need to adjust that balance. So the rule of thumb is when they're the same, we add. When they're different, we subtract. So in this case, it's a $120,000 debit balance and it's an $80,000 credit transaction. So they are different, a debit and a credit. So we will subtract the two of them. If it's a debit balance, a debit transaction, a credit balance and a credit transaction, they are both the same, so therefore we'd add them. But when they're different, a debit balance with a credit transaction or a credit balance with a debit transaction, they are the opposite signs, so therefore we will subtract them. So, another example, we also decided that we were going to buy some machinery and we're going to do that via a loan. We asked ourselves the 4 questions and we came up with we're going to debit the machinery account and we're going to credit the loan account. So in my general journal, I'm going to record a debit to machinery for the $25,000 and credit my loan account for $25,000. So exactly what we came up with when we did those 4 questions. So here's my ledgers. I need to post that $25,000 into the machinery account. So I'm going to go down to the machinery account, put in a $25,000 into the debit column. I'm going to update my balance, and then I'm going to do the cross-reference to the loan payable account. In my loan account, I want to put in a credit, so I go to my loan account, I put in my credit for $25,000, I update my balance, and then I will cross-reference it back to the machinery account. In our next video, we'll go through a more comprehensive practical set of examples, applying our knowledge of the 4 questions into doing journals and then posting into the general ledger. Thanks for watching. Until then, keep on smiling, and I'll see you shortly in the next video, gutter sucker example. Thank you.